morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for a rainy Thursday, May 1st. Well, mixed trade here overnight. Corn is the upside leader, up 2 to 3 cents. Soybean complex lower across the board, 2 to 3 lower in the beans. About $1 lower in the meal, 35 points lower in the bean oil, while wheat is mixed. Deliveries overnight about the same as what we saw the first day. Beans only 3 contracts, 25 in the corn, 80 contracts in Chicago wheat. Sizable drop in Kansas City wheat down to 249. Big drop in bean oil down to 164, while meal deliveries still fairly heavy at 563. We do get a lot of demand news out today, starting with export sales at 7:30 this morning. After the close, we'll get our monthly crush for soybeans and grain crush for the production of ethanol. Soybean crush in March is expected to reach nearly 206 million bushels, which would be a record high for the month, and down up about 1% year over year. Oil stocks are expected to dip to just below 1.95 billion pounds. Corn grind for the production of ethanol is expected to reach about 460 million bushels in March. That would be down about 2.5% from a year ago. Yesterday's EIA report showed weekly ethanol production rebounded 1% to 306 million gallons. That would be pretty much in line with the pace needed to reach the current USDA corn usage forecast. Another report from the EIA yesterday showed combined biodiesel and renewable diesel production dropped another 6% in February to 319 million gallons. This a 2-year low as the market just continues to adjust to the expiration of the $1 blender's credit. Bean oil used in the production of biofuels fell 12% in February to only 576 million pounds. That's the lowest in 5 years. Usage now over the first 5 months of the 24-25 marketing year has reached 4.746 billion pounds. That's down 7.3% from last year. USDA forecast is still showing a 2% increase. So despite recent cuts by the USDA, the current usage forecast is too high without reinstatement of the blender's credit. Yesterday, the Buenos Aires Grain Exchange reported Argentine corn harvest advanced just over 1% for the week to 31% done, as farmers have been focused more on harvesting beans. Harvest there advanced 9% to 24% complete. They kept their production estimates unchanged at 49 million metric tons on corn, 48.6 on the beans, both just below the current USDA forecast. Global weather remains mostly favorable, which will continue to work to limit upside moves for now. Good moisture here across the Midwest has eased drought concerns or drought readings. However, not enough to delay the spring plantings. We may see some localized flooding across the southern plains areas that continue to experience heavy rainfall. July corn is challenging its 100-day moving average with the overnight rebound that ahead of today's export sales. I look for old crop to continue to outperform new crop. I think this July D spread likely to go challenge at 40-cent level again. July beans did hold a test of its 50-day moving average on weakness overnight. We also saw inside trade for both products. We continue to wait on news on any new trade deals with key trading partners. Also, if we have indeed started negotiations with China. Inside trade for wheat, as prices did bounce off of yesterday's new contract lows in Kansas City and Chicago. The next support for KC comes in at 512 for the spot contract, 493.5 for Chicago. Thanks for listening, everyone. I hope you have a great day.